everybody, what's up? It is Thursday, December 3rd. So, taking a look at sentiment. Today, I sent out a breakdown and analysis of the weekly AAII sentiment survey. We saw another increase in bullish sentiment, and we saw another decrease. That's what I thought was interesting. Now, the level of bearish sentiment is the lowest since January 2nd of this year. So go all the way back to January 2nd, 2020. I remember we were in this big bullish run and everybody was saying, not me, but I mean, a lot of these Wall Street people were saying, hey, don't sell your stocks. This is the greatest time to get in. And a lot of them, they spent all of 2019 telling you to stay out of the market. And I was saying, you got to buy every dip. You have to buy every dip. And then coming into January, what turned me around on that was I saw the fiscal flows slowing down. You can go back and listen to my videos because they're up there. I do them every day. You can go back and listen to the videos, and I was saying, look, the situation is not that bullish. We're losing fiscal support, and then, of course, we had the COVID and the market crashed, and then at the end of March, I said, you got to get back in because they did the stimulus. Anyway, most of you know this. So we are now, that was the AAII, which I sent out this morning. The put-call ratio right now, the 10-day average of the put-call ratio is at the lowest level since August 27th. Now, August 27th, we were like 4 days away from a top, and what followed was a 10% correction in the market. The only thing is, I would add to this that the 20-day average, it's at the lowest level since September 1st, but it's not, at that low level that also coincided with a sell-off. I just think right now that the fiscal flows are too strong. I mean, I've been saying this every day, where I'm actually seeing the corporation tax flows starting to pick back up again. Remember, I look at those are very important as a barometer of economic activity. And they kind of, they came down a bit, indicating some softness, and now they're starting to go back up again. The year-over-year differential has now widened, or starting to widen once again. Dollar at the lowest level, the dollar index is at the lowest level in 32 months. Okay, April 2018. I came across a very interesting, and I'm going to tell you something about sentiment and why it could be misleading. Back in August, Morgan Stanley, their chief Forex analyst, said they were getting out of their dollar short because it was like the dollar was like so oversold. They said it was the most oversold in 40 years. There's a big lesson in this, actually. There's a number of lessons in this. Number one, it's a lesson about technical indicators, all right? This is why I tend to discount technical indicators. You've got to focus on the basic conditions. How many times have I said that? On the macroeconomics, on the fundamentals. Now, Morgan Stanley, they got out of their dollar short at the worst possible time. I mean, look at where we are now compared to where the dollar was in August. All right? Let me say this. Price tells you nothing. A lot of people trade by price, and they think price tells you something, and they'll even go one step beyond that. They think price creates conditions. It doesn't. It's the other way around. Conditions create price. I never focus on price. I focus on basic conditions. The price is going to get to where it's going to go based on conditions. Look, I took a lot of heat for my bearish dollar viewpoint over that period of time when, we had the trade war thing going on and the dollar rallied up. That was a very fascinating thing to think about and to analyze. And I've spoken about it many times. There was no reason at all for the dollar to rally with the so-called trade war. I mean, the only rational reason for the dollar to go up in a trade war would be if that trade war resulted in a shrinkage or a disappearance in the U.S. trade deficit. And it never happened. It never happened, and it wasn't going to happen. Everybody immediately jumped into the dollar thinking that the trade war, and it really wasn't even a war, there was some tariffs applied, but the rhetoric, they thought what? That was instantly going to wipe out this massive trade deficit. It was silly. It was ridiculous. That's why the whole entire time I was very, very confident that the dollar would turn back down. Now, at some point down the road, we don't know what Biden's policies, who knows? Maybe it'll reverse. I mean, Clinton, he engineered a reversal in the budget deficit and in the trade deficit. And that was a bullish period for the dollar. I mean, we don't have that right now. But let me go back to the Morgan Stanley thing. Because this is the pitfall of, looking at price and looking at these technical indicators, which are really, I hate to say it, but really kind of meaningless. All right, it's like tea leaf reading. They got out of their dollar short because their indicator said it was oversold. I mean, what does that even mean, oversold? If conditions are such that, we have not reached an equilibrium in a commodity or a currency or a stock, it's going to keep moving in that direction until some equilibrium is reached. And what causes the equilibrium? That those conditions have gone away or they have changed. All right? They've rectified themselves. Now you get all these big shots on Wall Street. Another guy is this Jim Chanos, who runs a short-selling hedge fund, which I think personally is the stupidest thing in the world. Somebody who lives their life to see some company implode, and that's all you do, is going around looking for disaster. I just think that's ridiculous. He's gotten destroyed on betting against China, on betting against Tesla. Tesla's selling 300,000 vehicles. They're going to be selling 1 million vehicles. Their costs are mainly fixed. Their profit is going to continue to grow. It is a growth stock. You short a growth stock? I mean, come on. That's not smart. Anyway, that's the situation. Fiscal flows are powerful. We need to see something. I mean, the sentiment indicators, they're saying, hey, we could have a correction at any time, but you just have so much fiscal support. You probably need a catalyst in here. We got to wait. I'm telling you, I'm seeing some of these big shot hedge fund guys now who were really negative on the market most of this year. They're turning super bullish. So, the environment is there for a big turnaround and a long-lasting turnaround. But you would need to see something happen on the policy side. And that means, we got to see Biden in there and see what he does. Again, he's bringing a lot of fiscal hawks into his administration. Doesn't mean it's going to turn out that way, but the potential is there. But right now, it's all bullish. Go to my website. Remember, I think I'm doing away with the 30-day free trial, and the price is going up to $500 a month, and it's still worth it on January 1st, 2021. Bye.